The Hedge Resourceman here. It's December 21st, 2023. Thanks to sponsors. First of all, I just started recording a video and my computer freaked out, so I have to redo it. Anyway, I'm just gonna try to make this quicker than I usually do. And when I say that, it usually turns into a 2-hour rant, but I'll really try this time. A few things. You've probably seen a few juniors have some pops in them. It's like, okay, let's think about the context. Did all these companies suddenly jump in value, typically? Well, no, not necessarily. The ones with good news, they probably jumped in value. But, okay, look at where we are. We're at the cheapest prices, or have been at the cheapest prices since like 2015. That's reason enough to buy. They're too cheap, okay. Then we have tax loss selling nearing its end. Maybe it has ended already, but I think there's just simply a combination. Because the funny thing, metals haven't gone up that much. I mean, gold at 2050, but it's like it was at 2100 last week or something. Silver was over, I think, $25, but some juniors are up like 20, 50%, 70%. So it just goes to show again, it's like nothing really makes sense in the market on a short-term basis. And it really is a voting machine on the short-term basis. So you have artificial selling pressure from tax loss silly season. When that dries up, okay, all of a sudden there's a bunch of people who are, you know, well, shares for sale just dry up. Which makes it a lot easier for the stock to move up. And if the only people who sold recently were selling because of tax loss selling season, so they are the only ones that are really selling, when they are gone, there's no more selling, and maybe the asks get thin. And all of a sudden, for some reason, someone gets optimistic, gets the ball rolling, and then it's like, you know, starts to pop off all over the place. You know, herd mentality. Oh, they see some juniors running. Oh, I should probably get into juniors again, and they start buying. Nothing to do really with value. It's people guessing where the share price is going to go tomorrow. And like always, like GDXJ. It was funny that, you know, I post a lot of investment memes on Twitter with buy low. You know, trying to lift people's spirits that you should actually, you know, invest in bear markets. You should invest deep into bear markets. That's how we make a lot of money in the future. And somebody said, it's like, yeah, we're not in a bear market, and he might be right. That's the thing. It's like, you never know. When did you know that this was the low going up until here? And again, if you're one of those that wait for a bull market before you invest, it's like, when is this a bull market? Maybe here, maybe there. Well, if you get in here because now you saw it go through, I mean, here you weren't maybe convinced, oh, maybe a false break, it's not higher than here, whatever. It's like top here, top here, top here, then it breaks through, and then you're like, yeah, now I'm pretty sure it's actually a bull market. Again, guessing where the short-term move is going to be, kind of. Minus 58% in like a week or so. Whereas the person who, the only thing he cared about, the only thing he didn't look at consensus, prognosis. He didn't look at projections. He didn't look at the metals prices. He didn't care what people think, where the sector is going, any of that stuff. He just looked at price to value all the time. So the longer this went down, the deeper it went down. He just bought more because the only strategy he had was to have his portfolio be in the cheapest shares possible. So he does some value reshuffling and is buying all the way down. His paper losses are mounting and mounting, but his value shuffling. So like some companies go down more than others. So he concentrates more into those, sell the ones that are cheap but not as cheap. Yada yada yada. All of a sudden he'll be lowering his average all the time. So when we get up here, until some people get convinced there's like, this is probably a bull market, he'll already be up. It's like maybe he gets his average down to wherever, here. It's like 96. This guy gets in, he gets 54. This guy gets in 42. And this guy, he gets met with he bought at the worst possible time from a short-term paper trading perspective. He gets minus 58%. He halves his entire mining portfolio, in more than half, in a week. On paper for a while. If he sold here, he would be stupid, of course. Then it rebounds. But still, it's like this guy who just, the only thing he looked at was what he could buy these companies for. He was up for a while, up less for a while, up more for a while, bam, he's actually down again here, still down less than the person who waited for a, quote, bull market, because he bought either here or here, whatever. And then it turns around, but he's like, oh, he just buys more because it goes down more. I mean, contrary to everybody else. All of a sudden up here, he's like, up 95%. And the buys he made down here, when it was the cheapest there would be in the next, well, until this, he would be up maybe 140% on those buys. Not that he, went all in here, it just added. So every I mean, you can add 2% that goes up 145%. I mean, everything adds up. So the point being that, like, we might look back in 6 months and see that this was actually the GDXJ's bear end. But at the time, nobody thought that. Nobody was piling in here, really. The ones who were, I mean, they might already be, I'm not going to say in the green, but it's like they're lowering their average all the time. That's the best defense. Because, again, why wasn't this the start of a bull? I mean, this is a pretty hefty move. I'm pretty sure I thought this was the start of a bull. But if I would have acted on that, timing, guessing, oh, I only invest in bull markets, well, it wasn't the end of the bull. It turned around rather quickly, and you're minus 50%. This guy, who's just averaging down all the time, he might almost be up at this point. And down more here. But he's at least down less than this guy who have this portfolio in, a few months. Or this guy who have his portfolio in a week. It's like the best offense and defense is just buying cheap. I mean, not listening to, everybody on Twitter is trying to guess where metals are going. I mean, I get advice every day about why you should not invest in junior miners and they could go down for a lot longer, whatever. It's like, that's absolutely useless information because that's true all the time. The only usable information is that we can actually use and act on. Saying that something can happen, which is true at all times, it's like, when can a stock not go down? Never. Unless it's at zero already. So what do you do with that information? Well, it can go lower. Okay, so how do I include that in my investment strategy? Only buy when it can't go lower? Again, you're buying it at zero in that case, because otherwise there's no point in time no stock can go down. It's just absolutely ridiculous, and they think it's advice. I mean, they don't realize themselves that it's just a short circuit. It's just a circle. It's like, well, I'm not investing unless it can go down more. And of course, they will just, what it translates into reality is that they sell low because they think it will go lower, and they buy high because they think it will go high. That's why people bought here, not because it was the cheapest, not because it was cheaper than here, it's just because they think it's going to go up soon. Here they buy because they think it's going to go up more soon. Here they buy because they think it's going to go up more soon. Dead wrong every time. The one who wasn't even trying to predict, let's say you buy here, not because it's a pretty picture. It's like, no, it's just cheaper. Oh, it went down more. That's even more of a buying opportunity. Up a bit, okay, down less, and then even more down, and you just keep buying the cheaper it gets. I mean, there's no way you're not going to end up making money in the long term, at least to the next cycle high, and kick the shit out of all the traders who brag about their, 10-20% return. Well, you might be up, hundreds of percent from that point. Sure, they might not take 50% paper losses in between, but this game is not about avoiding all paper losses. It's about making the most amount of money over the long term. And it's like you see some stocks, and it's like Eloro, it's gone up 77% in just a week or so, or 2 weeks maybe. So it's like you never know when the bottom is in. We don't know if this is the bottom. We don't know if this was the bottom. Was it too cheap? Probably, because the idea was that, well, everybody shat on Eloro. It broke through, you know, resistance zones, whatever. So the traders sold, and everybody piled on, calling it a shit project because they used the, you know, the underwhelming resource. But it's like, when you think about it, like, hey, I mean, and Quinton talked about this, and the team talked about this, and I talked about this as well. Not that it was my original idea, but okay, it made sense when Quinton explained that this inferred resource needs more infill drilling, because the model assumes that there's a bunch of rock within the, you know, block model or whatever that's considered barren or low grade, whereas in reality it's probably not. And we had a news release recently where it showed that I think the headline hole was like 59 meters, or like 433 grams per ton AG equivalent. That's thick and high grade within where the open pit would be. You would make a lot of money mining that kind of stuff. So we already have, you know, first proof of concept that, yeah, there's probably, I would guess, a lot more metals than got captured by the resource. The pit would actually have higher grade material than suggested by the resource, and all of that. But of course, if you're a basher, you don't care. You care about looking smart. And there's a bunch who have been bearish on Eloro, and if you think they're suddenly gonna like, oh, I'm gonna start being objective, actually, no, they pile on when they look right, which got more people to sell. And the thing is that people, when the sentiment gets so negative, no level is too low to sell. And all of a sudden, if somebody who actually was a bit more cool, calm, and collected, he's like, well, you know, the resource wasn't as good as I thought, but I think it's going to get better. I think this has a shot of being a legitimate, you know, big polymetallic deposit, you know, something similar to San Cristobal at the end of the day. In that case, I think I'm getting too, you know, the odds are too pessimistic. And all of a sudden, you know, first news release, some proof of concept up 76%. These are not small moves. And I typically hear, when you point that out, it's like, oh, have you seen this stock? It went up a lot. And then people say, yeah, well, you know, everybody that's bought higher or the last whatever, it's like they're in a loss. Like, yeah, I mean, that's true. But still, the idea is that, why do you hear that all the time? It's because everybody always starts buying high. And then they don't buy low. They probably bought up here, sold down here, and then find another stock that's up here, which risks of going down depending on the sentiment. That's the thing. It's like everybody starts off buying high. It's not like, you know, you have, I mean, how many do you think had a position here, this happened, and their share count goes like that, up. Let's say they had 3% in Eloro, down here they have like 6%. I don't think a lot of people does that. I didn't pile into Eloro down here. I miss opportunities all the time, but the idea is that you have to be, I mean, again, it's like bashers and all of that. I mean, 95+% of bashers and every pundit and they are shit at investing. They don't actually make a lot of money. Their main occupation is sounding smart. A contrarian here is like, yeah, you know, again, accepting that, yeah, the resource was underwhelming, but it wasn't this underwhelming, given that, you know, I think that this is going to get better, and one of these days the sentiment in the sector is going to change as well. So if you fast forward, like, let's say it plays out that way, that yes, they do infill drilling, it's actually higher grade and it's larger than the inferred resource, so it's a higher quality project in the future, and by that time maybe, you know, sentiment would have shifted. okay, how much, what could this be worth at that point in time versus what's the downside here, what's the odds of any of those scenarios happening, and they come up with like, yeah, I actually think with price going down, I think the market is too pessimistic, and they, take a punt, they add a bit, it's like, who knows? And another one of those would be like Novo, it ripped, 67% in 2 days. And the same thing here, it's like, it's gone down for so long that is this something to brag about? Not really, right? I mean, it was down at ridiculous level, 11 cents from peak. I mean, it's like almost totally erased. But I haven't really added in Novo in ages. I actually bought some when they announced that strategic joint venture with global lithium producer SQM. I don't know much about lithium. I know that SQM is like the BHP of lithium. I made a tweet like, okay, Novo's market cap is like 42 million Canadian or something. Their shareholdings in San Cristobal and whatever, it's like, I don't remember what it tallied up to, and E3, it's like a large portion of, even at the last closing price, since they're private companies, large portion of it. And they announced a deal with SQM. It's like, this is a material deal, I would say, for a 40 million market cap company with the land package they have. They have more deals and they have those, illiquid but assets nonetheless. And basically that news release got ridiculed by people who hate Novo. It's like, this news release, I mean, given that the conglomerate story ended in tears, they were not successful in making that economic. So, I mean, the gold conglomerate story basically has, died and gotten phased out. Does that mean that this deal is less of a thing simply because, the gold quote adventure? It's like I've said all the time. I don't regret investing in Novo. I knew it was a high risk, high reward story. Like any other exploration story, kinda. It had a high market cap, yes, because the price was unconventionally large. If there was a 30% chance they would make it work, I think Novo was incredibly undervalued. I wish it would have succeeded. I wish we could drill the conglomerates. I wish they got an access agreement, they could mine Egina, and the war sorters. That's a lot of stuff I wish would have happened. But it's like Juggernaut, for example. They released results from Midas. I think, yeah, Midas. Stock went down 4%. I just participated in a placement there, 4-month hold. So I'm immediately down like, I don't know, 40%. Am I too upset about it? No, it's like, I mean, if I would be expecting that every good-looking core ran, or that I should make money on every single high-risk, high-reward play I participate in. I mean, that's outrageous, and I would be a billionaire already if every single high-risk, high-reward story worked out. It's high-risk, high-reward. It's not low-risk, high-reward. It's not no-risk, guaranteed 10-bagger. This Novo was a unique case, but my point being that, I mean, it just, I think, got too cheap. It's not like I piled in. I just bought a few shares, and then they started rattling out news releases recently. So Liatam, the other partner they have, put what? Oh, they doubled their investment in Novo from 3 to 6% interest. Then they sold the Nullagine Gold project for much less than I thought, actually. I thought it would get more from that. But okay, let's look at the context. Pretty big liabilities, a cash drain. And the gold sector in Australia hasn't had that fun of a time. There's been mines that's been closed down over the last 2 years. Inflation is very high. Wages especially have gone up a lot. And there's no real major mining companies really close by, so they sold it to Calidus. I'm actually impressed they were able to well, somewhat impressed that they were able to get Calidus, a junior, to acquire that. So it's like, okay, when you think of the context, like, okay, gold companies overall are struggling in Australia. There's no major gold company nearby. The only one is a junior in a, hard market for gold. I mean, how much can you ask for? But the flip side is, if we don't sell this, we'll just keep burning cash. And, I mean, that was the big thing. No at face value has been cheap for quite some time. But it's like when you have that kind of cash drain, what looked cheap isn't cheap anymore. Now, if this goes through, they will be getting rid of their liabilities. They have to pay up some more money, I think, to IMC. But now it's, gonna be okay. They have 2 lithium deals. They have the gray thing. I don't remember the exact terms, but they'll have illiquid assets that's worth quite a bit of money. They will have cash. They're going back to become. They're basically transforming to the transformation is almost complete to becoming an early stage explorer again. It's like, will we ever see the highs of 2017 in terms of share price? I don't know about that, but it's like I took a small punt after the news, tiny amount, so it doesn't matter that much. But it's like more from a, I was gonna say, an idealistic purchase. It's like, this news is material. The stock isn't reacting. I think it's too cheap, so I buy some. Same with Magna. It's like, I've been buying recently, rebuying, and all of a sudden it's like, started, I think, buying here. I think it went too low. And again, I'm always measuring against my other holdings. Always measuring against my other holdings. Where do I get most bang for the buck? Magna, for no reason really, just got cheaper and cheaper. Have been getting cheaper and cheaper. And all of a sudden, boom, it's like blasted up 53%. End of tax loss. We see the same stuff. Eloro, sure, there's news out though, so that's one thing. But there's less resistance to the upside. Same with Magna. And this went up on no news, actually. And Novo went up on a lot of news. But still, you see these kind of pops. That's what typically happens in this sector. And we don't know. Maybe the bottom is in. I don't know. Maybe the bottom is in for the junior sector. Maybe the bottom for the GDX was put in place here. I don't know. The only thing we can do is try to buy where we get most bang for the buck. So am I currently chasing Magna higher? No, I haven't sold what I rebought. I think it's still too cheap. But the idea is that theoretically, if there was no news going from here to here, for example, or let's say, news out here. I remember I piled in here after the news. Really, depending on how good the story. If price goes higher and value does not go up in a similar manner, that's the price to value gap closing. If you do nothing, your portfolio blows out, right? If you have like 10% here, you might have 20% of your portfolio up here. Whereas if there was no news, they had news up. But it's like, if we assume that this was just price going, like, sentiment wave, instead of going from 10 to 20, maybe one should be down to 5% here. Or if Magna up here is still the best story, you might, have the same. Depending on what happens with the other stories. But my point is that when we have these kind of pops and whistles in some of these stocks, the first reaction is, the ones who bought high, they're still down, so it doesn't matter. It's like, you're still down, but it's like, what's the lesson? Like, I started piling in here. I rebought more shares recently here. What's that? That's low. And I bought actually all the way up. And then, you know, some days I bought, some days I sold, and I think it was around this time that, what was it? Maybe, was it, I'm trying to remember what stock. Was it Snowline? I don't remember, but it's like value shuffling. You might love the stock here, you might have more stock than you ever had, and you find out a new company, even if this goes down, maybe the other story is so good that it's like, yeah, I'm okay selling on the way down because I get even more meat in some other stock. It's like the hodl portfolios, they basically not touch the Magna position, so this was a big boost in there because it's passive long term. Went down, they actually added a bit recently, I think most of them. But again, the idea is to break the cycle, to not always starting buying here, do nothing and not add when it's like absolutely ridiculously cheap, and then it's like, well, it doesn't matter if it went up because I'm already down. Well, I'm down so much, whatever. The idea is not to buy high all the time, do nothing on the way down, and then, a pop doesn't matter. It's like, theoretically, ideally, we should have the most amount of shares when it's the lowest. If it goes up on price but no news, we should actually have less and less of it. I typically drink my own Kool-Aid, so my position grow to a way too large. So I don't play the market anywhere perfect. I don't even stick to the pure value principles like 100%. I was actually buying on the way up and all that, which in an ideal scenario, if it was cheapest here, this is where it should be the largest portion of your portfolio, and then decreasing if it's just price going up, instead of increasing because your 10% position turns to 15 here and 20 here. And the opposite is same obviously to the downside. If this were just, Nicholas crashed and all that nobody can predict, but assuming nothing really changed except sentiment, your exposure to Magna should have been going like this, and here it should maybe started up here and up to this point gone like this. It makes total sense when you think about it. But that's the thing, that's what typically we do, and that's the hard part. It's like we get swept up and we can't predict the future, and it feels pointless when stocks are down so much. But theoretically, let's take an extreme example, not extreme example, but it's like let's say we do believe that Magna is worth this much, for example, or will be. It's like, let's say you have, there's a bunch of ways to play. Let's say you have 5% here, turns to 10, goes down to 4, and then up. Okay, is that good or bad? It's a swingy ride, obviously. Or let's say you start buying, you have 5% invested here, you think life sucks, it's gone down a lot. But you recognize, I thought it was cheap here, it's way cheaper here. It's like somebody commented on a YouTube channel YouTube video that he's been buying Magna lately. It's like 2/3. Like, I believe that person will. I think. He really gets it. I think. That's a good sign that he really gets the sector, the value. That he's like, nope, this is just too cheap. I'm stealing money from the market by being able to buy this low. So let's say again. Somebody started with 5%. Let's say he's down to 2%, 1% even. But he kind of gets it. Maybe you forgot about Magna, whatever. He's like looking, oh, okay, wow, it's down here. And he's like, wow, now Magna is actually so cheap. I thought it was cheap up here. Maybe you had, maybe you shouldn't have had 5% here. Who knows? We're talking from a perfectionist standpoint. But he's like, okay, my 5 went to 1 or 2. I should have 10% here. So the best thing in hindsight, if the future is like this, the best thing would not be for it to have gone like I don't know, like this in that case, even though it's going to feel really nice to be plus all the way. But the best thing that could possibly happen from a longer term perspective, if you played it rightly, would have for it to have actually topped when you started buying, gone this low, you realizing that it's like, whoa, the market is absolutely batshit insane. Either nickel in Canada and PGMs in Canada is going to be worthless, or this is going to go up one day. If nickel in Canada becomes very valuable, or PGMs very valuable, whatever, it's going to go up a lot. And let's say that happens. You would make a lot more money in Magna in that case, depending on your decision making. If you started here and it went like this, too cheap, instead of like, let's say, fairly valued or relatively cheap, but had a smooth ride higher. This would have been the maximum amount of return you could have gotten would be 50% from when you started buying. Down here, in this scenario, your future buys down here would, net you 374%. Imagine if you have a 5% position that goes up 50%, or, a 10% position that goes up 374%. That's the thing. A bear market in itself is not good or bad. It depends on what you do in it. It's the same with stocks. And of course, there are stocks that should go down and stay down, and that's a totally different scenario. If everything went to shit for Magna, this price down here might actually be, it's overvalued. I don't know what would have needed to happen, but let's say, yes, there are cases. It's like Novo. You can't say that, it's just the market. A lot of things went wrong for Novo. And it's been punished way more than Magna, for example. Most juniors that, started production, I've seen a lot of juniors go bankrupt. So I'm actually surprised and impressed that Novo is still around. Because, this is a very unforgiving sector. If you take on liability, without the newfound gold shares that Quinton got Novo to invest in, Novo would be bankrupt. They've had like 9 lives or something. Let's look at some other stuff. Well, here's the Novo stuff. Inflection put out the news release. Well, they put out 2 in short order. Just to sum up, let's see here. Here's update on the drilling at Duck Creek. Favorable hydrothermal alteration interpreted to be associated with alcoholic copper gold porphyry system have been intercepted in deeper drill holes in the Duck Creek target. Extensive zone of inner proplyptic dominated by well-developed fracture controlled to pervasive hematite, epidote, chloride, plus minus calcite alteration with lesser blah blah blah. Magnetite, tourmaline, actinolite, pyrite, chalcopyrite, and locally bornite mineralization. This is the high-grade copper stuff, which is a good sign. And also, here you have initial scout drilling into the Fairholm target, intercepted sequence of strongly blah blah blah, localized chalcopyrite and bornite bearing quartz veins. So now they have encountered bornite mineralization at both Duck Creek and Fairholm. And we know that Miamundi, they intercepted chalcopyrite and molybdenum. So I would say they're getting closer to something. They're getting closer to a possible discovery at 3 targets at least. And then they tested more targets, and they go through that. It's like, assays are pending from Ningan, Trangi, assays from all other holes are pending. They had hit 2 meters of 0.23%, nothing to write home about, but it's copper, so is that just smoke from something? We don't know, but it's still, we know there's appreciable copper. 1 hole at Canoba, assets are pending, although no values of economic interest are anticipated, and no further work is planned. So I mean that was the idea from the start. They have this huge amount of targets, huge, absolutely enormous land package. They're just shooting their shots at target after target. We have Duck Creek high interest. We have Fairholm high interest. And we have, where's Miamundi? Here's Miamundi, which is also high interest. And they're writing off other targets. So it's like, you look at that, and I wrote something about this. 14.5 million market cap Canadian. So at the time, it's like... excuse me. I wrote this had a market cap of 14 million. I mean, I would say the chance of success priced in for just those 3 targets where they have Bornite, Chalco, or Chalco Moly, it's like 1.9% chance of success of finding something worth $1 billion that they would get 25% of. I mean, this is very, it's basic, not including cash, and it's to PFS level. But it's like to get an idea. Is that too low? Is that too high? I think that's quite low. 1.9. 1 in every 50 targets like this would turn into a $1 billion discovery. I mean, in reality, it's going to be either or, right? It's going to be either 0, 1, 2, 3 discoveries. We'll only see what happened. Nobody can possibly know. It's either there or there. What is there has been there for millions of years. There is no ambiguity. It's just that we have to obviously make some assumptions. What are we guessing? What's the probability with it? I mean, it's Schrödinger's cat. That's what investing is, basically. We have to make bets about what might be in the chest. What is there is there. If there's a cat there is a cat there, and it's been there. If it's not, or if it's alive or whatever, how the experiment goes. I just think it's too cheap. And there's absolutely has been no reaction from the market at all. And this is one of those stories where it's like, I understand people who, I'm going to wait for them to actually make a discovery hole. Because it kind of makes sense. But in my mind, it's like, look at the volume. 12,000 shares. I have a lot more shares than that. So in some of these cases, when the stock is illiquid, it's like, there's no way I'm going to be able to get in at... I might need to pay up 150% to get a full position. And that might theoretically still be worth it. But if you still think, hey, the odds are good enough that I'm okay with taking as a discovery risk, because at least it's like I know I'll have a position. Most of the times you should, like I've talked about before, you should really, in my opinion, not be in too many pre-discovery plays. There are some exceptions. Inflection is one of those exceptions for me lately, and I don't have a choice. I can't get out of my position anyway. But I'm not too worried about that. Because they're either going to find something or not. If they're going to find something, I'm going to make a lot of money on it. From this level here. But again, market doesn't care at all. There's no trading. You can only imagine, again, it's like, imagine a better sector and to make a discovery hole. When there might be millions of shares traded. It's like, then we're going to have fireworks. What are the chances? I don't know. Is it more than like 1.9% per just these 3 targets where they have smoke? I think so. Let's put it like this. Maybe there's a 15% chance that I'm going to make a 20 bagger in this. I'm not saying there is. I'm saying maybe. That doesn't sound too outrageous. There's not a 90% chance of making a 20 bagger. That I know. And I don't think it's like 1.9 per target either. So it's like, always, a no-brainer to me is not something I know for sure I'm going to make money on. I never know which stocks I'm going to make money on. I never knew that Hercules was going to hit like that. There's just degrees of probability and what the reward is. FireFox Gold, this one is actually very interesting. So Agnico announces financing and earning agreement with FireFox Gold. This is one of those stocks that's been absolutely left for dead. Was down at, I don't know how low it went. So now Agnico, one of the largest gold companies in the world. I'm just going to change something here. One of the largest gold companies in the world. They are taking a strategic interest in FireFox, which gotta make you think. It's like, okay, I thought Agnico was only gonna focus on Canada, and this is an early stage exploration play, district scale land package in Finland. So maybe they're thinking that actually we have the Kittilä mine. We're actually not going to leave Finland. We're going to double down. Maybe. Okay, we know that Agnico is very large. And we know that... What was I going to say? The largest undeveloped gold asset in, I think, all of Scandinavia and the Nordics is Rupert Resources Ikkari deposit, which happens to be very close to FireFox land package. Let's go and check the news releases out of Rupert recently. So this was announced today or yesterday, I guess. Yesterday. 20th of December. Let's look at Rupert's recent. 28th of November. Rupert Resources reports updated mineral resource estimate for Ikkari of over 4 million ounces of gold, indicating blah blah blah. Not 2 weeks later, Rupert Resources announces a change to board of directors. Okay. We are pleased to welcome Bill Washington as an independent director of to the board of Rupert Resources. Bill will add considerable investment banking and Canadian capital markets experience as we continue to progress the world-class Ikkari discovery. Investment banking and Canadian capital markets experience. Does that sound like, a deal maker, let's say? And then the day after, December 12th, Rupert Resources files a new technical report. So that's three, two material, like fact-based updates, news releases in short order, and in between they add a investment banking Canadian capital markets expert. I mean, this looks like you're kind of packaging the project, putting out there the latest characteristics of the project, if you know what I mean. You list the car with all the bells and whistles, the most updated bells and whistles and all that, and put in a capital markets experts. And shortly after that, you have Agnico making a move here. It's like, okay, Agnico is surely large enough to take over Ikkari. It will make sense to tie up Ikkari. Then you have a decades long gold mine, largest in that area, and you have interest in the surrounding land package, and you also have Aurion, which is bordering. I think they have they also have a district scale land package. They're bordering Rupert and FireFox, and their land position is going right up until, it kind of touches the pit outline, I think, of the Ikkari deposit belonging to Rupert. So in order to fully mine Ikkari as efficient as possible and take out all the gold you want, you kind of need land belonging to Aurion. So to wrap up, you have Rupert putting out material news, putting in place a investment banking capital markets expert all of a sudden, quote. Shortly after that, you have FireFox seeing a strategic interest by Agnico. And the third leg of the stool is Aurion Resources, which, I mean, is kind of directly affected or would directly affect the mining of Ikkari. So the question is, is this a tip of the hat from Agnico that they're actually thinking of not strictly sticking to Canada, but actually opening up shop, well, more so, they have the Kittilä deposit in northern Finland as well. But it's like, is this them hinting that we're actually gonna double down in Finland? So we're gonna be, let's say, Canada and Finland focused. They might not like, you know, to do what some other miners do, that they, you know, have a deposit here and there. Maybe when they get going, that they, you know, have they have a very strict focus, let's say. Maybe Finland will be one of their focus points. Somebody said that they're actually, you know, spending 100 million on exploration in Finland or something. So it might be the case that the board of Agnico, they have decided that, okay, in today's world, we want tier 1 jurisdictions. We want to be able to be there for decades to come. We want to build something that could sustain our business for the long term. We don't want to be too spread out. So this might be a hint that the current thought is that, hey, we'll probably pick Finland as our second country of focus, if you know what I mean. So in that case, I mean, this looks to me like, well, they're not going to buy up FireFox now, but FireFox might get bought out in the future if, you know, they make a discovery, and then that could obviously amount to some sizable gains over the next 1, 2, 3 years or whatever. But I mean, it's obvious that Rupert is kinda, I mean, this is ready. I mean, this is on the shopping block. I mean, this is pretty much ready to go, as I would see it. Brand new resource estimate, brand new technical report, a capital markets expert. I mean, this project is basically ready to be sold with its most updated figures. So here I don't see them making a strategic interest. Here they would be, I think, acquiring the whole shebang. And then the question is, okay, then you have Aurion as well, which is also kind of, you know, yeah, basically would be directly affected by it because they have some of the ground that a mine in Ikkari would want to use. So would Agnico buy Aurion, Rupert and Aurion and explore FireFox? Would they buy Rupert, make a deal with Aurion? Would they buy a sliver of Aurion? I mean, I don't know. But the direct takeover candidate, I mean, is obviously Rupert. And the second most likely candidate would be Aurion, because they've already tipped their hand with FireFox. I mean, they're not, and I do not believe that FireFox, the guys would be willing to sell it outright at what, you know, 50% premium or whatever, give away the whole land package. So that makes sense. But in Rupert's case, they can make more discoveries and all of that. But I mean, they already have a ready to go project, a world-class project. And this, on that note, I mean, if Agnico is about to choose Finland as their second focus point in the world, I sure hope they will be ready to part ways with their interest in Barsele in Sweden. I mean, it's not far away from Finland, but it's not in Finland. So maybe they will I mean, have their hands busy in Finland if they actually go ahead and you know, scoop up this entire region. That could make it easier for them. I mean, it might make them more willing to part ways and have, you know, Goldline / Barsele be able to buy out 100% interest in Sweden, because they will have their workers focused on stuff in Finland, and they might not even have the manpower or time to go over to Sweden. That's what I'm hoping for. So actually, yeah, Rupert is looking really interesting from that perspective right now. But again, I mean, is it like super cheap? I don't know. I mean, how sure can you be that they will get bought out? I don't know when. I don't know either. But it's obviously a beta play. I mean, it's a more so than ever before, given the brand new updated figures. So this should, let's put it like this: it probably will go up and down with the price of gold or sentiment. But there's the added sweetener that this might be a focus for Agnico to actually acquire. And since they've already started, you know, invested just in FireFox, the question is, okay, you know, will they just sit and watch forever when there's a kind of, you know, not shovel ready perhaps, but it's like a project ready to go here already, and they could already, you know, hit the ground running, buy that, start developing that, and then they have parallel exploration going on. I don't know. Yeah, so this is what I just talked about. Yeah, something to keep an eye on. It's funny. Rupert was one of the first. Rupert was one of the first juniors I bought for one of the HODL portfolios, and I bought it for their original project, and I didn't even know they were gonna, you know, discover Ickery. So I didn't. I mean, the portfolio didn't make too much on Rupert, but still, it's again, buy cheap, and the surprises are to the upside. The cheaper you buy, the lower hit rate you need. If you buy, I mean, again, going back to like Inflection, if I had 10 inflections, maybe one would need to actually work out for that one to pay for the other 9 and then some. That's why it's like, I was going to say, pisses me off when I see people, like, they assume that every single, you know, maiden drill campaign should be a success. Otherwise, it's like the, you know, management's fault or someone's fault or whatever. It's like they literally, it's like they literally believe that 10 baggers are just, everything they invest in with that has a shot of finding something should be a 10 bagger. That's obviously not how it works. Every single junior in existence has some kind of target. And how many actual discoveries do you hear, you know, get made? Not many. But again, the cheaper you buy, the less often you need to be right. Perfect. Yeah, basically that. I mean, it's just the reward side of the risk-reward function. So anyway, this kind of long. This video got kind of long anyway. But those are some things that's been happening recently. And just again, it's like, remember stuff like this. This is the important thing. Because the next bear market, I mean, I'm not saying this is over, but it's like you'll start to remember this stuff. It's like, yeah, all of a sudden, you know, they just popped. They just popped. No clear reason. Metals weren't moving that much. For some reason, they just popped. And of course, some have news as well. And the fact that it's like, don't believe the market's bullshit. There is no way that this is a value curve that's fair for Magna Mining, for example. No way in hell. No way in hell. I didn't even think this was expensive for Magna. But that didn't stop it from going down 72%. Yeah, nickel prices crashed. Yeah, they haven't made a pure footwall discovery worth hundreds of millions, at least yet. But still, it's like there's no way it was 72% overvalued here. It's just markets being markets. Like the market, I assume the market is always wrong. And if you're long, the good thing about that is that there's only 100% downside, and the upside it could be unlimited. So if you're long and taking bets where you think that it's way too pessimistic, again, you're putting the odds in your favor. How often do you need to be right? Maybe not often at all. Maybe 1 in 10. Maybe 1 in 20, depending on... And then, of course, I mean, I'm terrified but optimistic about Condor. It's like we should be getting close to results. I have a lot of shares. And it's either going to be Ramen or Rolex. And of course, then you have the market's interpretation as well. I mean, there might be, let's say good news, but the market doesn't get it, or the sentiment is piss poor on that day. It's like, that's hard to know. But it's like, it's not easy for me to get out of my position, my full position, for example. So I'm tied to the mast. And if they drill dusters, I'm probably going to be down 50% pretty quickly. But if this happens to be one of those occasions where it's like, nope, we actually got lucky. This is as good as we hope. This is as good as it looks. This is, I mean, then I think 70 million is going to look cheap very quickly. I just don't know which way it's going to be. And the thing is, again, because even though, yes, theoretically one could say, well, I think there's a chance that they have a $1 billion to $1.5 billion project here. Maybe more, maybe 2 billion, 3 billion. But one can't just say that, oh, it's either a 20 bagger, let's say, or minus 50%. Because those gains are not patented. If we knew they could release positive news and the market would not react at all. I mean, let's say everybody was blind for some reason, except you. Then obviously one would wait for the discovery hold if you knew you did need to pay up. So there was no benefit in being a holder going into the results. It's the patent that it's like, yes, in theory it's a, let's say 20 bagger versus minus 50% or minus 60% or whatever. But in reality, it's what you can act upon. So it's like if this is the real deal, and I figure, okay, if I go from 0 to a full position, it's I can't enter that position until it's up 200% already. I mean, this is just an example. 200%. Okay, let's say that's the case. I'm not saying that is the case. Then that's the risk-reward function. 200% patented gains. That's what I would get as a holder that the buyer of tomorrow after the news release wouldn't get. So that belongs to me as the risk taker. And I also get obviously the risk, which is, let's say, minus 50-60%. So that's in reality, that's where the risk function gets in, regardless if it actually ends up being I mean, if you know from the first holes that yes, this is going to be a 20 bagger, if you can get a full position until 200%, or if you could be a watcher and get in after 200% higher, that's the limit of the patented reward for the high risk high reward function of the holder. So it's actually not like 2000% versus minus 50 and then come up with, probabilities you think and come up with an expected value. Because those are not patented. You're going to be able to buy before it has gone up 2000% if that's the case. But the thing is, we don't know. And the thing is, I think there's a fair shot. I mean, I think there might be, I don't know, sounds crazy, but I think there's might be, you know, maybe more than 50%. And I know people say, well, that sounds pretty low, whatever. I think people underestimate the success chance of most early stage exploration stories. This happens to be, in my opinion, along the lines with like Goliath or Snowline, in that, well, Snowline technically had drill holes into Rogue, into Valley, but the idea is that we have like 800 meters of outcrops. So in a sense, we know there's mineralization there. And they drilled very deep. It's not like we only have theoretical ore zone, whatever. It's like, yeah, we have some soil samples on top, and we have no idea if anything runs. I mean, at face value, we kind of have the ore zone outcropping for 800 meters. We don't know how thick it is. We don't know how it will run. We don't know if they drill it at the right spots. We don't, I mean, a bunch of stuff. So it's not the typical pre-discovery play. Most juniors don't have a target where literally the potential ore body is outcropping for 800 meters. That's what makes this kind of unique, and that's why, even though it's not technically a discovery, I have a position that would make people blush or faint or whatever. So when the news is out, if they only hit dusters, I'm probably gonna take the largest single day paper loss. I mean, regardless who knows? Let's say they have dusters or whatever, but it's like, yeah, it's actually they drill the wrong areas and it ends up being a big discovery. But it's like on that day, I might, you know, be minus 50%. So that would be, yeah, probably the largest one day loss. But flip side is, if they have hit, if this is a high sulfidation, a good high sulfidation system, and they can already show with these coming drill holes that it's there, this might be the largest single day gain as well. And if we would get close to blue sky, that initial pop, I think, could be the beginning, because I mean, if this would go up 100% within the first, I mean, seconds of trading or whatever, that would be 140 million, and that probably wouldn't get close to what a proper high quality high sulfidation system could be worth. Yeah, so we don't know. I mean, that's the thing. So it's terrifying, but it's like, again, I'm always trying to think from the end, you know, because nobody knows what the results are gonna be. Nobody knows how any of these juniors end. So the question is, okay, if let's say, picture ourselves, news release day, dusters in everything, 100 meters of 0.2% AU equivalent. It's like, okay, that's not ore. And, you know, stuff like that. It's like, I don't know, 5-6 holes, whatever they're putting out, and it's like dusters and everything. And you're like, and you can't really come up with a scenario where it's like, yeah, I mean, I don't particularly know exactly how these systems work. I mean, you might be able to have like, yeah, we have a low grade halo, but the system is actually there. It's just that we haven't hit the guts of it. That might prove to be the case, but it's like the initial reaction, or let's assume that's not the case, and it's like, yeah, they basically tested you know, everything, and it's like, there's no way there is an economic deposit here, and you get slammed minus 50%, and that's before you might be able to, you know, sell any shares, let's say. Will I look back at this time right now and say, you know, will I have regrets? I should have bought after. I should have bought after the news release. Okay, I was dumb thinking that they would hit or whatever. It's like, I mean, regret. There's always going to be regret, obviously. But at the same time, it's like, well, they have 800 meters of outcrops. the drill holes, they have already upped the budget, I'm pretty sure. They're drilling much deeper than they thought, and they just keep drilling deep. It's like, would you do that if you thought we haven't hit anything, there's nothing here, and we just keep putting out more and more expensive drill holes than planned? That sounds a bit far-fetched. And why are they communicating? I mean, on Twitter, they update, like most of the time. Juniors that know they don't have shit to come up with, they try to slip away in the night. Forget the fact that we're drilling. They're kind of doing the opposite of that. I mean, they're communicating. They're not saying what they're seeing, but they're communicating depth. But it's like, again, it's like in poker, everything we do is for a reason. What was the guy thinking that, I'm gonna update the market on drill depth? It's a small thing, it's a detail, but it's like, what would prompt him to do that? I don't think he's sitting there, it's like, things are going really, really bad. We're at 440 meters now. Pray to God we find something this time. I don't think that's what's going through his or her mind. And then, of course, the opposite is true. The flip side of the coin. We get news release. It's like 5-6 holes, and average is, I don't know, 120 meters of like 1.5 grams per ton AU equivalent. And it's like, okay, we see where the holes are, and we can already, it's like, oh, geez, this looks like, I don't know, 2-3 million ounces at least. And I mean, I'm not going to even talk about blue sky scenario where it's like, 200 meters of 3 grams per ton or anything like that. In that case, I'm going to have a heart attack almost. But it's like, a solid, let's say, 1.5 grams per ton near surface oxidized. All the way, I guess, to blue sky. It's like, would I be shocked? Should I be shocked? Should I, look back and say, oh, it should have had even more? It's like, maybe, but you have to balance balance them out. Pick the pick the position size where you're least regretful in either scenario, if you know what I mean. If I have too little, it's like, well, if they miss, it doesn't matter, but if they hit, then you're like, well, that was stupid. It's like, it was pretty, the odds were pretty good given the context and outcrop and all that. So I don't know. I mean, any holder here is either going to look very smart or very stupid. And in reality, we only see the result. And nobody can say, it's like you see this all the time, after, a company misses whatever, people are like, oh yeah, I knew they were going to miss, blah, blah, blah. It's like, yeah, did you short it? No, they didn't. Success is not the norm. In this case, it happens to be, there's a lot of unique context relative to most other exploration stories. But I think it makes sense. So in reality, we should not even if we lose on a stock, on a case like this, we should be happy with our bets. We should not be necessarily happy with the outcome if it's, a very bad outcome, if they drill dusters. But it's like, if we can say that, yeah, okay, it was impossible to know. I mean, because if you knew, anybody would be all in or all out. I think the position I had, given the context we had, that I think this was a good speculative bet. It just didn't pan out. Because if I would have too low a position I'm paranoid all the time. But it's like, if I only had 0.5% of my portfolio in Condor, I would think that, wait a minute, this is a unique for a few different reasons. A, the discovery hole and the kind of proof of blue sky concept could almost be in the same news release. So it's not like a Great Bear where you have to wait 2-3 years for them to actually prove that it's there. This could kind of be proven in one swoop. Well, that's great. So it's like the compounding impact of that is obscene, especially since the rest of the sector is still so low. So your opportunity cost is high because you could put that into safer place, but at the same time, if this pans out and you, let's say you get 400-500% and you reinvest that in like safer place or something, I mean the compounding implications might be absolutely enormous. So that's a bit, how greedy you are and whatever. But yeah, no, I just love thinking about this, and the terrifying thing is nobody knows. Nobody knows. But I think it's good to play around with the negative scenario at least. Don't go and it's like, ordering the next Lambo or something like that. It's like, play around. Accept the fact that there is a chance that one day you'll be down 50% in Condor. Try to have already lived through it in your mind. Because if that were to happen, it's not gonna feel it won't be that shock, because if you only believe, it's like you're only dead set on this becoming a huge success, it opens up 100-200% plus, and it's going to go up 1,000 to 2,000%. The expectations versus reality, if the reality is negative, I mean, it's going to be so wide that it's like going to fry your brain. Play ideas, like be open to the possibility that's like, yep, I might be down 50% and I should still feel good about my bet. Because again, we see only the results. That doesn't mean you're a shit investor, you should have known better or anything like that necessarily. If you thought about the case, made up your mind, I think this is a good bet, whilst knowing there's no guarantees, I mean, there's nothing more you can do. We can only make the most rational bets as possible, not too greedy, not too risk averse, yada yada yada, depending on our situation, depending on the opportunity cost out there, and then the ships will fall where they fall. It's like Juggernaut. Do I regret? If I'm down 40% or 50%, whatever, from the private placement recently, should I be pissed about that? It's like, well, I think it was, I mean, the core looked good. I think it was a, good speculative bet at 14 million market cap or whatever. So it's not like a, oh, I should have known better. Should you? I mean, 14 million market cap, good visuals. That sounds like a pretty okay bet to me. And if every one of those would succeed, I mean, think about it. It's like, oh, they found another SK Creek from 14 million. I'm making, 50 bags on every single one of those. And it's like, oh, this was easy. It's like every single high risk, high reward 14 million market cap company you get into should automatically give you a 50 bagger. It's like, no, that's obviously not how it works, because there's a reason why almost nobody makes money in this sector. It's high risk, high reward. It's not low risk, high reward. It's not no risk, high reward. But people get pissed off every time the high risk comes around, or every time the high risk translates into, yes, a negative outcome. And again, nobody can predict that. The people who are bashing you or whatever, yada yada, they were not shorting the stock. That I can promise you. But everybody sounds smart. Very few actually are when it comes to investing. So turned out into a pretty good rant. Thanks for listening. Consider me very biased. I own shares of all companies I mentioned, I think. Some are banner sponsors. This is not investing advice. Like, don't invest money you cannot afford to lose. If you think there's a 100% guarantee that you'll make money on any stock, you're totally wrong. This is a marathon, not a sprint. But some cases are better than others. But know what risk you are taking. It's perfectly fine, in my opinion, to take asset risk if you're aware that you're taking on asset risk. And there's nothing like, oh, my whole life revolves around this exact story going, hitting blue sky. No, that's not a good recipe. You're gonna have overexposure, and the disappointment could be really big. I mean, I am optimistic on Condor. I actually think there's like a 50% chance that they might actually have something, the real deal here. Might be, I mean, in reality it's either 100% or 0%, obviously, because based on what we know, if I had, I was gonna say gun to my head, is like, do you think that Mother Nature has blessed this ground? I think, might actually, given what we know about the outcrops and all of that, and the way they're drilling and the way they're kinda, I think, suggesting that, they're hitting something that looks good. I think this actually might be a, over 50% chance of success here, which is very unusual. Yeah, again, biased. Don't bet the farm on anything. Thanks for listening.